So, welcome everyone to another episode of the All Things Wildfire podcast. Today's special guest is an outreach analyst from the California Department of Insurance, Sharon Smith. Sharon, welcome to the podcast.
Thank you so much for having me.
My pleasure. My pleasure. I think you are probably very popular and have been very popular. You're like the prom girl that's walking around everywhere that everyone's looking at like, I need to talk to her. Like, I could just imagine everyone's trying to get to you and ask you a ton of questions.
Yeah.
Especially in this crazy environment. Can you share a little bit about what you've been doing for the last few months after these initial wildfires that just took place?
Yeah, absolutely. So I was based in San Diego up until very recently, so I was close to the LA wildfires, and our immediate response as a department once those happened was to set up a series of workshops. So we had our agents go out, compliance officers go out and help people, fire victims, one-on-one get the help they needed. We had insurance companies there as well to provide checks and support, go over their policies, explain the process to homeowners. So I was there at those workshops, working with fire victims one-on-one and trying to get them the support they needed. And then I've also just been going out into the community and doing events of all kinds, but especially now, as you said before, it's related to homeowners insurance. It's related to fire insurance. That's where all the questions are coming from. So, yeah, and I speak to HOAs, I speak to fire safe councils, just any sort of neighborhood community that might be interested in learning more about fire insurance.
Got it. Got it. And like Sharon, we talked earlier, but the number one question people are asking you is, when are the rates going to drop? When are they going to come down, right? And so what are you able to tell the customers and people like me, like, right?
Yeah.
Like, what are you saying?
Yeah, I mean, I think it's a complicated question because there's not a single point where we're going to say, hey, this is when things are all going to change and everything's going to get better and we're going to get affordable rates. Because the reason why we're seeing these rise in premiums is two reasons. It's inflation and it's also climate change. These are two factors that are really, really driving this. And then on top of that is reinsurance. So reinsurance is insurance for insurance companies. They also buy insurance on the global marketplace, and those costs of reinsurance are going up as well. So insurers are seeing higher costs and we're seeing, more intense, severe, expensive wildfires. So as those things are happening, we're going to see rates increase. When we start to see that change, when we start to see less of these events, which because of climate change and then what scientists are saying, we're not anticipating that. We're anticipating more and more of these extreme catastrophic events. So there's a lot of things that we're doing at the Department of Insurance to regulate and stabilize the insurance industry. But where are we going to see that rapid change for consumers for premiums? I don't see that happening soon, unfortunately.
Okay.
Yeah.
And so let me ask you, like, I get it, climate change, inflation, but what about like Prop 103? I feel like there's a political something's going on in the background that like a lot of the customers are not really aware of, but there's this political thing going on, and
Absolutely.
I'm just kind of curious of how much can you discuss about that?
Yeah.
Because I know that there's a lot of meetings going on and trying to figure out what they can do with the insurance carriers and the DOI.
Yeah. So I'm sure you have some really smart listeners that understand what Prop 103 is, but just for anybody who might not know, that's the primary regulatory framework for insurance in California. It was passed in 1988, and it's mostly been untouched since then. Landscape has changed drastically for insurance, but the regulatory system has not really kept pace with that at all. And recognizing this, the commissioner has taken steps to kind of modernize these outdated regulations and create a more resilient insurance market. And he unveiled this through the Sustainable Insurance Strategy in 2023. So this was a series of regulatory reforms aimed at increasing the availability of insurance for Californians, creating a more resilient insurance market, protecting communities. And the key initiatives under this strategy was to improve the department's rate application approval process because there's really long delays in that. That's a huge reason that, people who talk about Prop 103 say it just takes a long time for the department itself to finish these regulations. So that's something that the department's working on trying to streamline. We're also including some or introducing new risk management tools in rate making, such as catastrophe modeling and incorporating reinsurance costs. Like I'm talking about, reinsurance was insurance for insurance companies. But these types of tools allow insurers to assess risk more accurately and then also account for wildfire mitigation efforts. And overall, the goal, like I'm saying, is to increase availability of insurance in wildfire distressed areas. So we want to require insurers to write more in high risk areas, reverse this trend of relying on the FAIR plan, and also just close the insurance gap for those that have, subpar insurance or underinsured. Make sure that Californians have access to traditional insurance options.
Got it. Got it.
So those are
Okay.
the big
And
regulatory changes that are coming.
yeah. So it sounds like there's a negotiating table that people are having to meet at, and so I think, like, is that like timetable a year away, 3 years away? Any thoughts on?
Yeah. So the regulations have already passed. They passed last year. The implementation of those has taken a while. So each proponent or each initiative has kind of a different time series. So right now for the catastrophe modeling, we just finished almost passing all of those catastrophe models. So reviewing them and making sure these are going to be the ones that insurance companies can use. These are the ones insurance companies can't use. I don't think there were any that were axed, but we finished that review process or in the final steps of that. Once that's done, then insurance companies need to have these rate applications tell us which insurance or which catastrophe models they would like to use. And then at that point, the rate review process will start again. And then insurers will either have those rate applications approved or denied.
You know what and correct me if I'm wrong. I think the catastrophe modeling is a big win because my understanding was that the insurance carriers in the past would do their own catastrophe modeling individually, and they would decide based on the information they have whether they're going to extend coverage or not. But it wasn't actually transparent to the other carriers, right? Or the homeowners. And so, are you saying now that there's going to be agreed upon catastrophe modeling for all carriers?
So each carrier is going to be able to still use whatever catastrophe model that is approved. It hasn't changed in the regards that they're going to all have different models. And part of the Safer from Wildfires regulation that passed in 2019 was that homeowners do have the right to ask for their wildfire risk scores. So they should be able to get this information from their insurer now. What are the things going into the score? How do I improve the score? What are the things that have dinged me that have not allowed me to have my insurance renewed or non-renewed, whatever that might be. So that hasn't really changed. What has changed is the review process of these catastrophe models for rate making. They were using them before for underwriting, but this is the first time they're going to be able to use them for setting rates. So that's the big change.
Got it. Got it. Okay, fantastic. Now, you mentioned the Safer from Wildfire program. Can you expand a little bit more about what the Department of Insurance has outlined for homeowners to be able to use as almost like a template as to what they can do, right, to not only be safer from wildfires, but also to be put in a position where the carriers can look at them more favorably when it comes time for policy renewal, right?
Yeah. So the Safer from Wildfires was a ground up approach to wildfire resilience, and it had three layers of protection. So the first one was to protect your home or business. That's protecting the structure itself, having the Class A fire rated roof, having a 5 foot, little bit later, but that includes fencing, making sure anything touching the house is fire resistant as well, having fire resistant vents, the last 6 inches of your home, making sure that's non-combustible, enclosed eaves, upgraded windows. I think those are off the top of my head. That's the protecting my home part. And then the other part of this was protecting the immediate surroundings. So that's defensible space. That's the 5 foot ember resistant zone. And then making sure any of those combustible sheds are moved at least 30 feet away. And then the last part was protecting the whole community. So if you are in a fire-wise community, which is or a fire risk reduction communities, which are these community-wide programs that create action plans to start basically being safer together. And so these are nationally recognized programs, and they're managed through the National Fire Prevention Association. So if a community wanted to start a FireWise program, that's where they would go through. It's not a designation we're giving at the Department of Insurance, but all of these actions qualify homeowners for different types of discounts. And there's not you get 10% if you do this, 15, it depends on your insurer. But if you do have some of these, then you might qualify, and that's something you want to reach out to your insurance company about.
No, I love that. I think Firewise communities, for the average homeowner, I think it's great to understand whether you're Firewise. Like, there's a lot of HOAs out here in California, Colorado, like all over the place, and so I think the beauty that I've seen is the people that are in a Firewise community, like that is a plus for you already. And then you do your own remediation or resiliency at your home, it's another plus, right? So the more you can stack, I really do feel like the homeowners can begin to win here. Some people don't realize that they're already in a Firewise community, and if they just make one more step or two more steps, they're going to be in a really good place when it comes time for renewals.
Absolutely.
Yeah. And so with regards to, I want to jump over a little bit to some of the things that have been going on. Like, you got, State Farm's under investigation, and that's kind of like a hot topic, like what is going on?
Yeah.
And I know you probably can't talk about the details of that, but what triggers an investigation? What triggers an insurance company to go in under that scrutiny?
Yeah, absolutely. So most of these are complaint-driven investigations, especially in the case of State Farm. So after these historic wildfires in Los Angeles, our department started getting lots of calls about basically how State Farm was handling these claims. And this is something where I won't talk about the details, because that's something that's going to be litigated and things. But how these things work generally is that consumers that suspect misconduct, they file a complaint with our department, either online or via phone. We have compliance officers that basically detect how valid these complaints are, what the potential scope of the misconduct might be. We request more information from an insurance company, require them to give us documentation, their responses, how long are these adjusters taking to reach out to consumers. And that's kind of the evidence gathering phase, where we're gathering all that communication and things. And then we're analyzing the practices themselves, seeing what exact violations happened. And a lot of times, I get complaints from consumers being like, okay, so, they looked into it, they were able to resolve it, what now? Or, they weren't able to resolve it, what happens now? But our department is taking in all of these investigations, all of these calls, and trying to build larger cases if we already suspect some misconduct maybe is going on. So even if your individual case isn't resolved immediately, this is something that we're looking into further. And so there really is a focus on claims handling when it comes to the State Farm lawsuit. How efficient are they being? Are they responding to consumer requests, or are they changing claim adjusters 10 times? So these are the kinds of questions that are coming up, and they were informed by consumers.
Got it. That's so interesting. Can you share how many other carriers are under investigation?
Right now, for the claims handling in LA fires, it's only State Farm, as
Got
far
it.
as I've
Okay.
seen. Yeah.
Okay. Got it. Yeah. Yeah. So we have clients too that have had State Farm, and when you said, they've changed the adjuster a handful of times, like that's a real thing,
Yeah.
and I think for many homeowners that could be obviously frustrating because, you pour out all the information and a fraction of it gets to the next person and the next person. Um, how long, Sharon, does a investigation typically take?
It really depends. I couldn't give you a time. Some of these legal proceedings have taken years. It's unfortunate, but that's kind of how the legal process has played out, especially in California. There's appeals, there's evidence gathering, there's so many things that go into it. So I couldn't give you off the top of my head something that
Got it.
how is this going to happen?
Yeah. Now,
So
now,
we'll
based
see.
on history, what's happened in the past where, hey, a carrier has been found guilty of whatever, breaking some of these Department of Insurance criteria or expectations. Um, does the homeowner get a refund, or what typically happens in those types of
It
penalties?
depends whatever the outcome of the litigation is. So sometimes if it's monetary, then the consumer might be able to, get their money or their claim paid out, whatever that might be. Sometimes it's a settlement if it doesn't go that far. Sometimes it's um, the misconduct needs to stop. They'll send like a cease and desist or whatever that might be. So it depends on kind of the questions at hand. What are the damages from these consumers? So again, I'm speaking really broadly because I don't know exactly how this one's gonna
Yeah,
end
no, I
up.
appreciate that. Um, Thank you for sharing. Now, if we shift gears into the California Fair Plan, uh, we do have savvy listeners, but at the same time, I would love to hear your explanation from the Department of Insurance on what is the California Fair Plan,
Mhm.
how does it work, who funds the California Fair Plan, um, and how does that really work?
Okay, yeah, the California Fair Plan is colloquially known as the insurance of last resort. So it is not a state agency, it's not a public entity. There is no public or taxpayer funding that goes into the Fair Plan. It is simply a fire insurance pool comprised of all the insurers that are licensed to conduct property and casualty business in California. So if a homeowner has exhausted all options, can't obtain any coverage on the traditional marketplace, the Fair Plan is there as a temporary solution. It's supposed to be temporary. A lot of people, it's the only solution. They have to be on it for years, but it's meant to be a temporary solution for standard fire insurance. It started after the Watts riots when insurers weren't writing policies there. So it was kind of a stopgap insurance. But it's a name peril policy, meaning it's only going to cover lightning, fire, internal explosion, and smoke damage. So that's it. If you need further liability coverages, all the extra coverages, you have to have an additional policy to make it a comprehensive homeowners policy. And the Fair Plan coverage is limited to $3 million. And there's homes in high wildfire areas that are worth a lot more than that. So it is a big concern that we have, these large homes that aren't fully insured there. But with the sustainable insurance strategy, one of the parts of it that I didn't mention yet was that we were trying to modernize the FAIR plan as well. So having more comprehensive coverage. So I think the $20 million commercial, it's like per location before. We're going to per structure now. So it's going to be up to $100 million of coverage for larger businesses, HOAs, and kind of closing those coverage gaps. And the other initiatives that I had outlined in the sustainable insurance strategy are really aimed to get people off the FAIR plan. We don't want to keep expanding the FAIR plan. We want people off this. We want them back into the traditional homeowners insurance market. So there's necessary kind of solvency protections that have been added to the FAIR plan that are going through the assembly right now, to make sure that these the Fair Plan can continue paying out claims. That's something that was a huge concern after the fires, as well as getting lots of questions about that. But there are solvency protections that are being put into place to make sure the Fair Plan is able to
Got it.
be
Got it. So
whole, pay
so
out their.
that's so that's I'm glad. It sounds like the Department of Insurance is looking at this and saying, "Hey guys, the FAIR Plan wasn't built for this, right? Obviously, it's just grown to this,
Hmm.
unfortunately, and now there's concern that okay, there may not be enough money to pay out these claims, so let's figure out a plan to make this happen, to get them paid. Like what?
Hmm.
When does how does that work? How does
Yeah.
like when you have like you don't want the an insurance company to go insolvent, and so someone has to come to the rescue. What typically do you think is going to be happening in
Yeah.
cases like
So I'm
this?
sure you've heard of the assessment process that the Fair Plan assessed their insurance companies. So the way I know there's a lot of people that are really concerned about the Fair Plan going insolvent, but for that to happen, they would basically need to make sure every single insured company in California was to go to insolvent before the Fair Plan. Because remember, it's not backed by taxpayer funding, it's backed by these private insurance companies. So, what after the LA wildfires, what the Fair Plan did was saying, hey, we do not have enough in our coffers right now to pay for this. We need assistance from our insurance pool to help pay for that. So, they asked for $1 billion from their insurance companies. So State Farm, all of the big admitted carriers, that $1 billion is going to need to be, paid by them. And then half of that can be passed on to consumers through a one-time fee. That's right now being litigated again. So who knows? It's one of those things like I'm not exactly sure where that's going to end up because there's now legal proceedings to kind of block that assessment as well. Basically saying, hey, the Fair Plan can't pass these costs on to consumers. That's like the basis of the complaint. So that's not something I got lots of questions about, like how much is it going to cost me now that the Fair Plan is, not able to pay their claims. We're kind of a far way out from that now that it's being litigated.
Got it. Got it. Okay. Now, it's the admitted carriers that are paying into the FAIR Plan, right? Not the
Exactly.
non-admitted.
Exactly.
Okay.
Yep.
So if a homeowner is looking to get insurance and an admitted carrier, State Farm, Farmers, Liberty Mutual, like they're like, hey guys,
Mhm.
we're not,
Yeah.
writing policies in your zip code or in your area. People are going to be not forced to, but another option is going to be a non-admitted carrier,
It is.
right?
Yeah.
And so, are you finding that the non-admitted carriers are double the cost, a little more expensive? Do you have a pulse on that?
I don't know overall, it's usually more expensive. So the reason why a lot of insurance companies don't write in California, they're saying, "Hey, we can't charge what we need to basically make our money." But um, a unadmitted insurer can charge higher because they don't have to go through the approval process through the Department of Insurance. They're not regulated by the Department of Insurance. So if a homeowner is trying to obtain coverage and the non-admitted, sometimes they call it the surplus lines market, it's not backed by the California Insurance Guarantee Association. So there's not as many protections for your claims, and it's not, again, um, regulated by the Department of Insurance in the same way. They're not licensed by our state. They might be based out of state, they might be based internationally. Doesn't mean it shouldn't be considered, but it's worthwhile to note what those rates are going to depend what your home where your home is, why it's not being insured. There's a lot of factors that go into those rates. Overall, I see them almost always be more expensive, but sometimes not as expensive as the Fair Plan. So it's up to the homeowner and their insurance agent to kind of look at those options and see what works best for them.
Now, with regards to the admitted and non-admitted, admitted being part of the California and governed by the rules
Hmm.
of the Department of Insurance,
Yep.
what as a consumer, what benefits do I get or should I be thinking about when I'm going to go admitted, or what am I losing if I go with a non-admitted carrier?
Yeah, so if you're in an admitted insurer, if you're one of the ones, the large ones that you hear about all the time, then you're backed by the CIGA, California Insurance Guarantee Association, meaning if anything were to happen to this insurance company, if it were to go to insolvent for any reason, your claim would be paid by this association. It's basically like a backup plan. So all of the admitted insurers, they have to pay into CIGA, And so your claim will definitely be paid. If you have a non-admitted insurer, you don't have that guarantee. So if that company were to go insolvent, you don't have that recourse to be able to get your claim paid out. Now, I haven't heard of these non-admitted insurers going insolvent in a long time. That's not something that I've seen typically. But again, that's something that homeowners should know going into it, that you don't have the same recourse if you do have a claim and this company were to go insolvent.
Great. Thank you for sharing that. I think that kind of, allows people more information as to, I think, oftentimes you have a broker or a friend that says, hey, you should try this insurance company because they gave me insurance. And if they're not admitted, prices are higher, but to your point, better than California Fair Plan.
Sometimes.
But sometimes as consumers, we don't really understand the liability exposure that we might still be having, right?
I will say the other benefit would be with the fair plan versus non-admitted is that if you're in a non-admitted, you're most likely going to get a comprehensive homeowner's policy. It's not just going to be your named peril and you have to add all these other coverages. So you're getting a traditional homeowner's product, not on the admitted market, but on the non-admitted market. And the fair plan, again, it's just that named peril, very basic policy.
Got it. Okay, great. Now, with the fair plan, you were saying the things that are covered are lightning, fire, I forget what else.
Internal explosion and smoke.
Explosion. Okay. I don't know how that happens.
Yeah, I don't know.
But then you mentioned smoke. And so
Yeah.
is smoke cleanup and deodorization, is that covered by the fair plan?
It's supposed to be. And this is something that has been very apparent after the wildfires in Los Angeles is even the homes that weren't completely burned down, almost I've heard some homeowners be like, I wish it was completely burned down because the smoke damage, the claims, and all of this has been so complicated and it's really frustrating for them. And I can completely see why, because with a total loss, it's a total loss. There's no room for error. There's none of that, right? But with a smoke claim, it gets a little bit more complicated, and there's not standards right now to say this is how it's cleaned up, this is how much it should cost. There's not that regulation in place. So recognizing that, the commissioner actually started a smoke remediation task force. It's very new. I think it was just outlined. The members of it were just announced maybe a week or two ago. But this smoke remediation task force should allow to basically come up with a set of standards that focus on kind of the testing, the remediation of smoke, of soot, of ash, of damage, because we know that there are real health impacts to being exposed to these types of contaminants. So the Department of Insurance is really focusing on developing those standards, and that's the job of this task force, to provide these kind of clear, consistent, science-based standards for smoke damage and assessment and remediation. So this kind of gray area isn't here anymore, because obviously it hurts the homeowners at the end of the day to not have that clear understanding of what they're covered for and what they should be able to get out of this. So
I love that. As a disaster restoration contractor ourselves, we've been cleaning and deodorizing homes for the past few months, since late January. But yes, the California Fair Plan was saying they're not going to pay for smoke cleanup. Love to hear that now you've got this smoke remediation task force. Like that's pretty awesome. And I think for homeowners, refreshing. And I got to say, like, Commissioner Lara, he's had a lot of pressure before the fires, right? I mean, you could just see it. Like the rates were going high. 2019 fires had taken place, and he's doing a lot of work, right? Safer from wildfires, all that, and then bam.
Yeah.
I'm like, okay, poor guy. Like, seriously, like, you get nailed. And so I love to see that even among the struggle and among all this chaos going on, he's still able to push forward and go, hey, man, we gotta, like, right now what's happening is the homeowners are in desperate need. They're crying out. They need help. Let's get this task force in place, because honestly, like that is to me someone who's listening to the customers, and so it's just great to hear because I know that the DOI has been struggling for years on trying to come to an agreement with the carriers on trying to figure this out. I know it's not as easy as signing anything or pushing a button or come to an agreement. It's complicated. There's
It
no
is, yeah,
question, but
absolutely.
hats off to him for making some of these things happen for sure.
Yeah, absolutely.
Are there any new things or any additional things that he or the department's putting into place with regards to these recent wildfires?
So yeah, there were a few actions that they're not finalized just yet. One of them was banning the list. So you might be aware, your listeners might be aware that after you have some sort of loss, what insurance companies want you to do is basically give them a list of every single thing you lost in your home. Now, that's something that I go out into communities and tell them, hey, please make sure you have an home inventory. Take a video, take photos, have some sort of documentation of what you have. But a lot of people don't have this, and it's a cumbersome, heavy lifting kind of task to tell somebody, I need every single thing in your home. So right now, the commissioner sponsored legislation that's going through the state legislature right now, to basically ban this list. So insurance companies have to pay you, I think it's 60% or so of your coverage without the list. So I don't know exactly what that's going to look like. It was first introduced as like 100% of it. I think there's been several revisions since then. But that's something that we should hopefully look forward to because it's been a huge, huge burden for homeowners that have just also gone through such a traumatic loss of losing all their content. So also have to go through listing the things that they lost. So that's something to also keep your eye out for. And then there's another piece of legislation the commissioner sponsored. I'm forgetting the exact name, but it's to give grants for home hardening and defensible space and things like that. So to encourage more and more mitigation for homeowners, I think that's paramount.
That's fantastic. You know, when you talk about the list, it reminds me after the 2019 fires, I had a customer come up to me and she said, "Hey, OP, I lost my home. It's completely burnt to the ground. This was over in Malibu." And she said, the carrier is telling me to make a list of all the things that I had, and I have to just remember because I don't have any
Mhm.
documentation anywhere.
Yeah,
And so the adjuster recommended, hey, have a notepad next to you every day and night. So when you're sleeping, you wake up at 2 in the morning, you
you
remember what you
remember.
had in your
Yeah,
kitchen drawers. Like that's the
yeah,
advice, right? I'm like, oh my
yeah.
God. And
No,
I
it's
get it. Like, but so I love this because I mean, if we were all to close our eyes and think about what's in our living room, we're going to catch most of it, but there's a lot we're not going to catch, right? That's so much,
absolutely.
so valuable. But to know that there's something coming in place that the carrier can just say, hey, we're going to give you a percentage of your coverage, I think is going to be a blessing for people
Absolutely.
because otherwise we'd all go
Yeah.
crazy.
Yeah, absolutely.
Yeah. And leaving money on the table, you know? Um,
Exactly. Yeah.
uh, I go into my wife's closet and I don't even want to think about it. I'm like, man, how much money's in there? Right? Like, if the place were to burn down, we go, I don't know, give us X, and then we'd lose a bunch of money because, like, who knows how many shoes are in there. Um, but the other thing you mentioned about the home hardening, um, yeah, I love that. I think, man, you know, I tell homeowners because this having seen the results of wildfire and having been evacuated before, um, I've hardened my home, but it's a constant thought process as to have I done enough? Great. Okay, what about my neighbors? You know,
Hmm.
because my neighbors can also burn down my house, right? If their home burns, I'm now vulnerable. So part of what I'm doing is like trying to educate them and trying to, you know, we have a hillside on the back and I'll spray fire retardant on my yard, on their hill, on
Hmm.
I'm like trying to spray whatever I possibly can.
Community
Um,
effort. Yeah.
but I think that as homeowners, um, we need to take more accountability for making the investment. And I think it's great that if the DOI is going to incentivize people even better, right? For them to say,
Absolutely.
yes, I'm in. You're going to give me X amount of dollars. I'm going to put in the rest, just so we can make California not only safer from wildfire, right, from our homes, but also make it more affordable for us to be able to afford insurance. So,
Absolutely.
this is definitely a complicated topic, and a lot of experts, I'm sure, are working hard to try and figure this out. But Sharon, before I let you go, and thank you very much for
Of course.
talking to us. Is there anything else you'd like to share with the listeners of what they can do or what you'd like them to walk away with?
Yeah, I would say definitely go to our website, insurance.ca.gov. We have a lot of resources there that you might not know that you have. You have rights as homeowners to know your wildfire risk score, to know why it is your insurance company canceled you. We have a top 10 tips for finding insurance if you don't know where to start, if you just got non-renewed. And you can also just call us for help. You can go over your policy with you line by line. We have a, live agent you can talk to if you have no idea what's going on, if your adjuster's not answering, whatever that might be. So we're here to help. And our number is 800-927-4357. It's 800-927-HELP. So if you call that, they should be able to get you at least pointed to the right direction. And then we have a lot of just great resources on our website as well, like a home insurance finder tool. You can put in your zip code, see who might be riding in your area. It's going to give you a very long list, but it might be a start if you're having a hard time. And there's just all sorts of information, not even related to fire insurance, but about automobile, life and annuity, pet insurance. I mean, there's a lot of resources on our website. So I would say definitely go to that. And then just to note, the act that we were talking about, it's the California Safe Homes Act. That's AB 888. And that's going to be the bill designed to basically give grants to those wildfire mitigation efforts. So call your assembly members and tell them to support that bill.
Boom! There you have it, folks. I love that. Thank you. And I love seeing what the DOI is doing with all the activity that you guys have and the support you guys have. And thank you for mentioning the phone number, because I think some of our listeners might be sharing this to go, hey, you have questions about your policy, call them up. Love that California has resources like that for homeowners to be able to call and to have it explained to them, because a lot
Absolutely.
of clients just don't understand or understand enough what they actually purchased until they actually need to use it. And
Yeah.
so thank you for
We also
being a
have
part of that.
liaisons all over California. So we have MEs everywhere that are able to go to your communities and talk to them one-on-one and answer questions and do things like this. We're here to engage. We're here to help. That's our job as outreach analysts. So absolutely.
I love it. I love it. Sharon, thank you so much for being on the show. And I look
Thank you for
forward to
having me.
talking to you maybe next year when some
Yeah,
of these things have been rolled out, right? And we could talk
absolutely.
about some of the successes that have been taking place. So
Yeah, yeah.
thank you so much.
Thank you.